I just wanted to share that I'm using a lot of my research from my CCIM Institute. I have been a CCIM designee since 2017. Took me 4 years to get this designation, so I'm extremely proud of it. And we do have a lot of research paper, and that helps me to determine whether the property is a good investment property for our clients or not, or help me to do market research for our clients as well. So let's start with, this is what we use. IntelliSite is one of the benefits as a CCIM that we get. And as you see that in San Jose, we look at the employment change, because that for commercial real estate market, we really have to understand what's going on with the economy and the cities. So San Jose, Sunnyvale, Santa Clara area, but the past 12 months employment change actually has gone up, even though despite we keep talking about hearing a lot of layoffs, but then we are actually seeing more jobs being added. And so the employment growth rate was at 1.32%. And the San Francisco, Oakland, and Berkeley area, same thing. It actually has increased employment, and it had a positive of 0.34% growth rate in terms of employment. And in terms of multifamily in the San Jose, Sunnyvale, Santa Clara area, multifamily vacancy at 5%, and net absorption is at 1,260 units, and asking rent is at about $3,300. It sounds so high compared to any part of the other part of the country. Rent growth is very healthy at 3.7% year over year, and the cap rate is at 5.3%. While retail, the vacancy a little higher, is at 7%, which is expected. Net absorption is at negative 43,000, and asking rent at $39.46 per square foot per year. And the rent growth is at about 0.3%, and the cap rate is at 7.3%. While office vacancy, as we have heard a lot already since COVID, the vacancy is pretty high. This is at 27.6%, and net absorption is at negative 849,000 units. And for asking rent, is average about $48.80 per square foot per year. And rent growth is at positive 0.5%, and cap rate at 8.1%. And I'll come back and talk a little bit about the cap rate as well. And industrial properties have been really strong, 5.4% vacancy, net absorption positive 310,000 units, and asking rent at $10.75 per square foot per year, and rent growth at 1%, and cap rate at 5.1%. So as you see that, the office, they have the highest cap rate, meaning that you actually getting probably more cheaper compared to the other asset types. Industrial is still one of the most popular in the South Bay area, and then next to multifamily. Retail actually is not bad either. The cap rate is at 7.3%. The vacancy is relatively low, but then office is that you're still buying at 8.1%, but with a 27.6% vacancy. So what the data is showing here is that the South Bay area, San Jose, Sunnyvale, Santa Clara, this is kind of like metropolitan area that they look at, still have a very healthy industrial occupancy at 5.2% vacancy. The retail vacancy at 7.1% is actually not bad at all. And then in the industrial is positive and net absorption at 310,000 square feet. And the industrial cap rate at 5.1% reflects very strong investor interest in the industrial properties. What I love to see is that the multifamily, they are still doing really well, although the rent continues to grow. I mean, it's great for the landlord, but it's really tough for the tenants. So that's why we also have the California rent control here. And the multifamily cap rate compressed at 5.3%. The investor demand is still really, really, really strong here. And employment is growing at 1.3%. So it shows that we still have very strong commercial real estate demand. But the challenge is that the office vacancy is still really high. So and there is still a lot of office supply coming online under construction. So it is still quite hard for the office space to be leased out. And then, of course, as I mentioned, the housing affordability in the South Bay area is still really, really high. It's basically 8.9 times price to income ratio. So that is going to be difficult for people who are not making the top income. They're not the top income earner in the area. And so, however, if you look at this, the chart, this is from CoStar. San Jose apartment rents push higher in May because the supply keeps landlord in the driver's seat. So the rent is still going really strong. And what is interesting is that they were saying that compared with the national market, San Jose remains in the class of its own. Average asking rent in San Jose now in the mid $3,300 per month, doubling the US average. And while